Welcome to another edition of the More You Know Co. podcast that's all about the people and places of Northern Colorado. Today, Al and Allie deep dive into all the complexities of mortgage rates, how they get adjusted, and what to watch for. Today's podcast is sponsored by Matt Weaver at Excel Mortgage, your trusted partner for expert mortgage solutions.
Okay, so you found your dream home, right? The offer is accepted, and boom, the stock market suddenly takes off.
Oh, yeah.
And now you're kind of like sweating it out, wondering if mortgage rates are about to go through the roof. And that is exactly why we're doing a deep dive today on how a stock market rally can actually affect mortgage interest rates. We're going to try to decode this whole thing together.
It's really interesting because I think a lot of people don't realize how intertwined things are.
Yeah.
You know, like a hot stock market can actually influence what you end up paying for your mortgage.
Yeah, it's not quite as simple as, stocks are up, so mortgages are down, or vice versa.
Yeah.
There's this whole chain reaction happening behind the scenes.
Totally. And a stock market rally, a lot of times it signals confidence in the economy, which can actually make things a little bit more expensive when you think about it, like for borrowers.
Okay, so that sounds a little counterintuitive.
Yeah.
How does that work? How does a strong economy lead to higher mortgage rates?
Well, when investors are feeling really good about the economy, like super bullish,
Yeah.
they'll often shift their money away from like the safer bets, like bonds, and go towards, assets that could potentially grow a lot more, like stocks.
So it's like that, let's ride this wave and make some serious cash.
Exactly. Yeah, let's go for it.
Yeah.
But here's the thing.
Okay.
When investors sell off those bonds, what happens is bond prices drop.
Okay.
And their yields rise.
Now, hold on. Yields, I need a little reminder here. How does that connect to my mortgage?
So think of a bond yield, kind of like the interest rate on a bond.
Okay.
And mortgage rates, they're really heavily influenced by this one specific bond yield. It's the 10-year Treasury bond.
Gotcha.
Yeah.
So if that 10-year Treasury yield goes up.
Your mortgage rate is probably going to follow suit.
Okay.
Lenders need to offer returns that are competitive.
Yeah.
And those returns are pegged to what investors can get elsewhere, like in those Treasury bonds. So keep an eye on that 10-year yield. If you see it jump by even like 0.5%, you can bet your mortgage rate is going to feel that.
That's a good tip.
Yeah.
So even though, a stock market rally doesn't directly hit the mortgage rates, it sets off this chain reaction
Right.
in the bond market.
Yeah, it's like a domino effect.
Yeah.
And to make it even more complicated, we got to bring in a big player here.
Okay.
Inflation.
The word that makes everyone's wallet just feel a little bit lighter.
You got it. And a booming economy, the kind that you see reflected in a stock market rally a lot of times, can actually make inflation even worse. More demand prices go up. It's economics 101.
Yeah.
But how does that all tie back into mortgage rates?
Yeah.
Well, when inflation is on the rise, investors, they realize that their money is not going to be worth as much later on.
Right.
So they demand higher yields on those bonds to kind of make up for that risk.
They want to make sure that they're, staying ahead of that shrinking buying power.
Exactly.
Makes sense.
They got to hedge their bets.
Yeah.
And that upward pressure on bond yields that's all fueled by those inflation fears spills over into the mortgage market. It pushes those rates higher.
Okay.
Lenders got to keep up to stay competitive.
So it's kind of like a double whammy. Then, stocks going up can push bond yields up. Inflation can also do the same thing, both lead to higher mortgage rates.
You got it. It's like this really complex ecosystem where all the different parts are always interacting.
Yeah.
But there's one more crucial element we can't forget.
Oh, there's more?
Oh, yeah.
This is getting intense.
It's a big world out there.
Yeah.
Think of it this way. We've got the stock market, we've got bonds, we've got inflation all playing their parts, right? But there's this powerful conductor trying to orchestrate the whole symphony.
You're talking about the Federal Reserve?
The Fed, that's right.
Yeah.
And their actions can have a huge impact on those mortgage rates.
All right, so let's talk about the Fed. How do they play into all of this mortgage rate stuff?
So imagine the Fed's like the party host, right?
Yeah, okay.
And the music's too loud.
Uh-oh.
That's inflation. And people are getting a little rowdy. The economy's getting a little overheated.
Oh.
They might just, turn down the volume a little bit.
Okay.
Raise interest rates to try to kind of chill things out.
They're like the cool down crew for the economy.
Yeah. And here's the thing. Even just the anticipation of the Fed raising rates can have a ripple effect.
Oh, really?
Throughout the whole mortgage market, lenders, a lot of times they'll adjust their rates like preemptively.
They're trying to kind of get ahead of it before things really get out of hand.
Exactly. They're trying to stay ahead of the curve. And remember those 10-year Treasury bonds we were talking about?
Yes.
When the Fed raises rates, it often affects those yields too.
I see.
And as we already said, those yields, they're tied directly to your mortgage rate.
Okay, so a booming stock market can push yields up, inflation can push them up, and then the Fed's actions can push them up too. It's like a triple threat.
It really is. You're really connecting the dots here.
Okay, good.
But it gets even more interesting than that.
Oh, no.
It's not just the U.S. stock market.
Right.
We got to remember that we're living in a global economy.
That's true. Yeah.
So stuff that happens on the other side of the world can totally send shockwaves
Wow.
through our bond market,
Yeah.
which ultimately, affects those mortgage rates.
So like a crisis overseas could actually lead to higher mortgage rates here.
It sounds crazy. That is wild.
But that's just how interconnected the financial world is. So everybody's always watching the Dow Jones.
Right.
But smart homeowners, those are the ones who are paying attention to what's happening globally.
Yeah.
It's all part of the big picture.
Okay, so we've got this whole web of factors.
Yeah.
The stock market, bonds, inflation, the Fed, global events. It's a lot to keep track of. It's a lot.
Yeah.
But when you understand how all these pieces fit together, that's what gives you the advantage.
Knowledge is power, especially when we're talking about, these big financial decisions.
Yeah.
Like buying a house or refinancing.
I'm starting to see that it's not just about watching, like the stock ticker.
Right.
It's about understanding, like, what's going on underneath.
It's those underlying forces.
Yeah.
And that's what can help you, like, time your moves strategically.
Oh, okay.
So, for example, if you start seeing signs of, the stock market surging and the Fed's talking about raising rates, you might want to think about locking in your mortgage rate sooner rather than later.
That's good advice.
Yeah.
So it's not just about reacting to what's already happened,
Right.
but kind of trying to anticipate what's coming next.
Exactly. And that's when you really start to see how valuable it is to understand these connections. But keep in mind, too, it's not all about stocks and bonds. There's all kinds of alternative investments out there.
Oh, really? That smart investors use, to try to hedge against risk. Maybe earn some higher returns.
This is blowing my mind.
It's a whole world out there.
There's always more to learn.
Absolutely. That's what makes finance so exciting.
Yeah.
It's always evolving. There's always new challenges.
Yeah.
But when you've got a little knowledge, a little awareness, you can navigate the complexities and make smart decisions for your future.
I feel like I've unlocked a whole new level of understanding.
That's what we're here for.
Yeah.
To help you kind of demystify this world.
Yeah.
And empower you to make the best choices for yourself.
So for those of us out there who are, dreaming of owning a home or maybe thinking about refinancing, what are the key takeaways that we should really remember from all of this?
Well, I think the biggest thing to remember is you don't want to get too fixated on just the stock market.
Okay.
Definitely part of the puzzle, but it's not the whole picture.
Right.
Keep a close eye on those bond yields, especially the 10-year Treasury. That's kind of like your canary in the coal mine.
Okay.
For any mortgage rate moves.
So it's like we have a crystal ball.
Yeah.
But instead of magic, we're using real world data.
You got it.
Yeah.
And don't forget the Fed. They're like the conductor.
Yeah.
Setting the tempo for the whole orchestra.
Yeah.
So pay attention to what they're saying. Their announcements, any hints about future rate hikes.
Okay.
That can give you a real advantage when you're figuring out when to make those mortgage decisions.
This has been really eye-opening. I feel like I'm finally starting to speak the language of finance.
That's great.
And we can't forget about what's happening globally, right?
Right. A crisis overseas might seem really far away.
Yeah.
But it can have a real impact on your local mortgage lender.
So it sounds like staying informed is really key.
It's not just about watching the financial news.
Right.
It's about understanding what's behind the headlines.
That makes sense.
And remember, there are all those alternative investments out there.
Yeah.
Beyond just stocks and bonds. You might want to check those out as a way to maybe hedge against risk and potentially grow your wealth even more.
I feel a lot more prepared now to tackle this whole mortgage process.
Good. That's what we want to hear.
This has been a fantastic deep dive.
Awesome. Well, hey, now you can impress all your friends at your next dinner party.
Oh, yeah.
With your new knowledge about how Wall Street and your dream home are connected.
I will.
That's great.
Thanks for breaking it all down.
You're very welcome.
And for everyone listening out there,
Yeah.
happy house hunting.